Market crash or just a mild correction? Where are we in the market cycle? Hi, it's Martin from Real Stock Value, and today I want to talk about the market cycle and where are we in it. So clearly in the last few years, the US stock market performed really well. And the question is, for how long can this go on? Now let's start with the obvious stuff. If we look at the history, this is the plot of the S&P 500 index. We can see that every 3, 4 to 8 years we had at least a correction or a recession. Now the last one was in 2007, 2008. Now we are approaching 2015-16. It's about 8 years, so one is due. Now the question is, what are the other metrics saying? I actually use the P/E ratio, the price to book value ratio, the price to sales ratio, and the dividend yield in the real stock value to evaluate the stock market and separate stocks. I don't want to steal all the thunder of the analysis that I did. However, I do consider that I need to get out this information as quickly as possible, because in a few months maybe it's too late already. So I will start with the P/E ratio. Now we look at this P/E ratio, the value of the P/E and the returns that we can expect in the next 2 years. They are just dots all over the place. There is just no correlation. This means that actually there is no information in the P/E ratio about the future of the stock market. There is just none. Now, if we really want to use the P/E ratio, then we need to use the Shiller's Cape index. In that case, we do have some kind of information, and we can see that we are at the high side. So we are not that high as in 2000, but anyway, this ratio is quite high even now. Now let's look at some of the metrics that actually offer good insight. One of the metrics that I found out that gives us a really good hint is the price to book value index. And we can see that if we pay less for the assets of a given company, so if the price to book ratio is low, then the chances that we will make good profit in the next 2 years are high. And if we pay a lot for the companies, so the price to book value is high for the index, then the chances that the index will drop in the next 2 years is high. Now the question is, where are we based on this metric? The high was reached in 2000 and the ratio was 5. So the price of the stock market, the S&P 500 index, was 5 times more than the book value of the companies in the S&P 500. The low was in 2009 around 1.8, and the average is about 2.75. Now where are we in this picture now? Actually, now we are at 2.85, which doesn't seem too high. However, we need to take into account that the 2000 high was really high, and that's why the averages are high as well. So we also need to take a look at the 2007 bull market, the bull market that ended in 2007, and on that case it just touched 3 and after that dropped dramatically. So currently we are standing at 2.85, so quite near to the 3. Could it double from here? Sure, it can, but in that case we should expect a market crash just like in 2000. Now let's take the third metric that I wanted to talk about, and maybe this is the most important one. This is the price to sales ratio. What does this mean? This means how expensive are the companies compared to their sales value. The high of this metric was reached in 2000, and it was 1.77, and the low was in 2009 and it was 0.8. Where are we now? We actually did a new record, so we are standing at 1.8 now. We surpassed the 2000 high, but this is really disturbing. Based on this metric, a crash could be just around the corner. Key takeaways here: a correction or recession is due every 8 years. The last bull market ended 8 years ago, so one is due. Based on any metric, the stock market is really expensive. Based on some metrics, a crash could be just around the corner. If you hold any companies that you're confident in, based on their value, their book value, their earnings, you're confident that that's an acceptable price for that company, then sure, hold those companies. However, if you're playing momentum stocks, be very, very careful. Those could drop 80% if a crash comes easily. So look out for those. I hope that you find this useful. If you like this, please give us a thumbs up. Check out our other videos and visit our webpage as well. Thank you. Bye.